everybody. Jeff Gibby here, back in the webinar with you. Thanks for coming. Really appreciate your attendance tonight. And we have a very exciting webinar lined up for you. Barry Burns is somebody we've been working with for a number of years. I know a lot of you signed up. I don't know if you attended the summit that we had, but I wanted to bring Barry back just because we spent a lot of time working with you, or with him, I should say. And we developed a really cool Metastock add-on that I think deserves some special attention. So we've brought Barry in today to kind of show you a little bit about his 5-energy trading methodology. And you guys, if you've been to a webinar before, you know this is coming. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins, and it is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. All right, let me talk to you a little bit about Barry Burns, and then we're going to turn the time over to him. Barry Burns is somebody that I've known for, I want to say, about 3 or 4 years. I came into acquaintance with him. I work with a lot of people in the industry, and we've done some webinars with traders tax accounting, and I was asking the gal I was working with who she really liked in the market, and who gave a really good webinar and knew what they were talking about. And Raven brought up Barry Burns. That was 3 years ago. So this month we officially finally launched the product with Barry that kind of takes his 5-energy methods and puts them into Metastock. Barry is quite an accomplished speaker. He has really a big following in the industry, is what I'm finding. And we're pretty happy, or I'm very happy with the result of the product. Just to tell you a little bit about Barry before we kind of get underway, he has just released and is very happy about his Trend Trading for Dummies book that's published by Wiley. And I'm not sure when it releases, but you should go buy a copy. I'm sure it's really good. Barry, we're going to go ahead and bring you on now.
Okay, yeah, I'm here, Jeff. I'm not sure that other people can hear me, though. And also, let's see, I don't see the icon here for sharing my screen.
Yeah, let's do this real quick. I think I have to actually turn the time. I had to give you control. Let me go ahead and do that. There you go.
Oh,
yes.
okay.
Now let me ask a question too. Can you guys hear Barry?
Okay, testing 1, 2, 3. Testing 1, 2, 3. Okay, there we go. All right.
Everybody's
So
saying
now,
they can hear you, so you're coming through loudly there, or you're coming through well.
Okay. Okay, good. All right, good. And my screen is up, and it looks like we're good to go. All right, awesome. Well, thank you, Jeff, and thanks to all the people at Metastock who have been an absolute pleasure to work with. And yeah, Jeff is right. We've been working on this for quite a while, probably longer than any other single project I've ever worked on. And my apologies to the amazing programmers over at Metastock, because I really put them through the ringers, asking them to do some things that most programmers would say are impossible, but somehow they're so talented, and they figured out a way. Some of the things they had never done before, and that's when you know when someone's really good. It's when they figure out how to do something that's never been done before, and that's what they've done. So I appreciate their patience, and definitely admire their professionalism and their skills. So we've come up with something really, really unique. And by the way, I've received quite a few emails asking if some of these features would be available on other stock charting programs. And Metastock's much more than just a stock charting software. It is that, but it's a lot more than that. And the answer is no. There's some things here with the Metastock plugin that are and always will be exclusive to Metastock, simply because of its functionality that is unique over other programs out there. In other words, some of these things it would be impossible to do with other charting software. So I just want to, for anybody who's going to be emailing me after this and asking, I've already received a lot of those emails, so I just wanted to say that up front. Metastock is actually the first charting software I ever used, and I've still got it on my computer, and I'm still using it to this day. So that goes back decades, and it's really evolved since then. Gosh, when I started using it, I mean, it was good then. Now it's just phenomenal, and they have constantly kept up with technology and creativity. They've got, again, so many wonderful features that you can't find anywhere else. So it's a very, very powerful program. There's a little bit of a learning curve to it if you want to use all the functions. Just depends how much of it you want to tap into. But oh my gosh, it's definitely worth it. And I just can't say enough good about it. So having said that, what I'm going to do is my part of the presentation, which will be about the next 40 minutes or so, is I'm going to share with you my Top Dog Trading 5 Energy methodology, give you the concepts behind it, the philosophies, the techniques, the setups that we look for, that sort of thing, so that you know what the trading methodology is. Then I'm going to turn it over to Jeff again, and then Jeff will give you the real highlights of the specific plugin for Metastock for Top Dog Trading, and specifically what the unique features are that it does with this methodology once you learn what the methodology is. All right, so for some of you may already be familiar with my methodology, so the beginning may be a review for you, and that's fine. Reviews are always good. Good to have these things ingrained into our brain cells through repetition, and you might even pick up a few little nuances that you missed before, hadn't heard before. But hang in there, because then when you find out what Metastock can do with the Top Dog Trading methodology, I think you're going to be very, very delighted. So here we go. First of all, let's see, Jeff gave a brief bio of me, but I'll just add a little bit more to it. I've been awarded numerous Reader's Choice Awards from Stocks and Commodities magazine over the years. Jeff mentioned Trend Trading for Dummies. Yes, that book came out about 8 weeks ago, so it's available. Get it from your local bookstore or from your favorite online bookstore. I've also been featured in a couple of other books, The Complete Guide to Investing in Derivatives, for example. I've done educational events for the CME group, obviously for Metastock, the Eurex Exchange. I own highprofitcandlestickpatterns.com. I was featured as one of the traders that they highlighted in both the Complete Guide to Using Candlestick Charting. They devoted about eight pages to me in that book alone. The disclaimer, Jeff already did a good job of that, so we can skip through that, which saves a lot of time. I've done a lot of surveys, and what I ask traders, I have access to, well, just a huge number of traders out there, and I've done a lot of seminars around the country, and I work with a lot of different companies, so I really get a lot of feedback from traders. And one question that I ask a lot is, what are your most common trading problems, struggles, or frustrations? And then I build my education around that. So here are the most common answers that I've received to that question. Number one, people said, well, one of their biggest problems is they enter the market. Let's say they buy into a trending market. And then after they get in, before the market goes up much, then it turns against them and they get stopped out. Then, right after they get stopped out, the market turns it back again and goes back in their original direction of their trade. And this reminds me of something that one of my mentors taught me. He's a floor trader at the CME, and years ago I went out to Chicago, got an apartment out there and worked with him. And he said, Barry, he said, one of the biggest problems retailers have is they're often right, but at the wrong time. And that is exactly what people were saying here. They're saying the same thing he said. It has to do with timing. That people can basically get an idea of the general direction of the market, but when to enter that. In other words, if you're going long and you're in an uptrend, when is the best time to get in so that after you get in, the market continues to go up instead of wiggling down, doing an ABC complex retrace or something like that, and you're getting stepped out, and then the market goes up. So timing is a big part of my methodology. I really focus on getting optimal timing, and I've come up with a way that is an extremely high percentage of wins in the sense of getting in on the final cycle low in an uptrend or getting in on the final cycle high of a downtrend. I like to trade retracements. Here's another one that they pointed out. They said, yeah, one of our biggest problems is getting out of big moves too soon, and so we don't make the huge profits. So they make some money. Here in this case, okay, they're making a little bit of money, but then afterwards they find out, gosh, I should have stayed in because I could have made a lot more money. And this can be caused by several different things, but it raises the question, how do you determine how long to stay into a market move for optimal profits and avoid opportunity lost? So my methodology addresses that very directly. Getting stopped out too often, I'm going to show you how I avoid doing that. Not knowing the best place to exit the market, I'm going to show you how I do that. And then trading a trend that doesn't follow through. And I'm going to address that very directly today, right here in today's webinar. All right, so we're going to address these issues right here in the next 35 minutes. All right, so my methodology is all about one thing. And you'll find that everything I do is actually pretty darn simple. And that's one thing I learned. I used to do a lot of mentoring, one-on-one mentoring, and I'd have people come to my office and they'd bring their laptops so I could see their charts and see what they were doing. And inevitably, the people who are losing money, 9 times out of 10, I'll say, their charts, when I looked at their charts, they were very cluttered. They just, wow, filled with all kinds of indicators and wiggles and jiggles and lines and dots and arrows and oh my gosh, it was crazy. And I said to them, oh my God, I'm like overwhelmed looking at all of this. I can't make heads or tails out of it. And they would say, yeah, I can't make heads or tails out of it either. I said, well, then why are you setting up your charts this way? And they would usually say something to the effect of, well, I just figure the more stuff I have on there, the more likely I am to make money because I've got more confirmation. And I had to tell them, yeah, well, first of all, that's not true because of the law of diminishing returns. So it's true to a certain extent, but then after that point, it doesn't help you anymore. In fact, after that point, you're asking too much confirmation from a chaotic market that isn't precisely accurate, and so it reduces the number of profitable trades you could actually have if you didn't ask for so much from the market. Number two, it's a psychological issue where it puts you into the state of mental overwhelm, and you can't trade with this in that mental state. You have to have clarity, and to have clarity, you have to have simplicity. And there's a balance to it. There's a balance between having enough information to establish a probability scenario, but not having too much information so that you experience mental overwhelm. And Einstein once talked about that. Of course, he wasn't talking about trading, but he said, you want to make everything as simple as possible, but no simpler. And I apply that saying to trading. I find that to be very true. So when I went out to Chicago, it was amazing because there you got all these professional traders and guys who have been around for years and years and making 5 figures a day. And I would look at what they were doing, and they, you know, in the pits, yeah, they're a little guarded, but I was there for quite a while, so pretty soon they start to let down their guard a little bit. And then I'd go out to the bars with them, and that's when they really let down their guard. And when I saw what they were doing, and I looked at their charts, some of them were chart traders, some were not, but for those who were, I looked at their charts and I was like, oh my gosh, these are very simple charts. And then they would tell me about what they did, and I was like, wow, that is so ridiculously simple, it's crazy. And so they were working with minimal information. Now, there's so much information available in the market, you can't possibly consider it all. So it's very easy to get overwhelmed. So you just have to intentionally draw a line in the sand and say, I'm going to use this 1% of all the available information, but this 1% is all I'm going to need, and I'll show you why in a minute. And the rest I'm going to completely ignore. That's not going to be my game. Other people might play the game with the other 99%. Me? No, I'm going to use this. Is going to be my specialty. This could be my focus. I'm going to focus on this 1%, make money with that. And The other thing that these guys did was they had impeccable discipline and risk management and money management. That's really where they were shining. Okay, so what I did after seeing that was I simplified my method as I had before. Instead of making it more complicated, I found that the answer was making it more simple, reducing things, eliminating unnecessary things. So I eliminated it down to 5 variables. And my methodology is all about measuring these 5 what I call energies in the market. Now, these energies I find on a chart, and I use a chart because charts tell you what's really happening, where people are putting their money where their mouth is. I don't really even look at bids and asks anymore. The days of the SOS bandits, that's over. I've sat there next to people and watched them, put in bids and asks just to move the market, and that's all, they game it now. They game it, so that's useless. I want to see where are people actually buying, where are they actually selling, where are they placing their money, and where the professional money is. That's the commitment. So I don't want to hear the rumors. The news is even unpredictable. It's important because news definitely moves the market, but it's how people feel about the news. It might be great news and the market tanks. Why would that happen? Well, 2 reasons. Number 1, Dow theory, they've already discounted the news, anticipating it. Or number 2, the news is great, but for some reason, traders on that particular news item were overly optimistic and expected it to be more than great. They expected it to be spectacular, and because it was only great, they short the market. So all kinds of crazy stuff happens. The point is that, yes, news moves the market, but up or down, that depends on people's expectations. And trying to guess those expectations is challenging. And yes, I know there's news reports that tell you what the expectations are. Well, those are sometimes accurate, sometimes not. So what I do is I wait and I watch. Again, I don't work with theory or rumors or gossip. I look for where the money is being placed, where the buys are, where the sells are, and I follow the money, the smart money. So do that with the 5 energies. Okay, what are these 5 energies? Let's just make a list of them right now. I want to write these down. So the first energy, and by the way, again, to keep my mind orderly, which is very important, mental discipline, mental focus, managing, you can't really manage the market, right? You can't move the market and you can't manage the market. So the market's going to do what it's going to do. It's not like a purse puppy. It's more like a wild lion in Africa. And so you can't control that thing. And it will never be domesticated. So the best you can do is to manage yourself in the situation. And that's what we do in the markets. We manage ourselves. So the first thing that I do to manage myself is I want to make sure I keep a clear mind. And so that I'm never confused, I'm never overwhelmed, I'm never uncertain as to what I should do. All my decisions are very objective, black and white, and rule-based. That's why I call this a methodology. And when I look at a chart, I always look at things in the same order, and that helps keep my mind orderly. So when I look at a chart, it's always like this. Number 1, what's the trend? Up or down? That helps me my decision. Am I looking to buy or looking to sell? Which side of the market am I looking to take? Then the next question is, okay, let's say we're in an uptrend. Is it a strong trend or a weak trend? And that's the energy of momentum. Momentum is strength. Now, trend is always a lagging indicator. By definition, trend is a lagging indicator. If you're using a trend indicator that is supposedly leading, I can assure you it's not a trend indicator. And the reason is because, again, by definition, the definition of trend by Webster's Dictionary is the extended general direction of whatever you're measuring, in this case the market. So we have to use long-term indicators for that. And therefore they're lagging. All they'll do is they'll tell you what is the direction up to this snapshot in time on the hard right edge of the screen. So I don't know if that trend is strong or weak. If it's a weak trend, it could turn at any time. And of course, the worst time for it to turn would be right after I get in. And this is where we go back to our list where people say, well, I trade a trend that doesn't follow through or turns against me or I get stopped out. Why? Quite often because they're trading a weak uptrend. They'll buy a weak uptrend. As soon as they get in, the trend changes because they don't know if it's strong or weak. So then we look at energy number 2, momentum, and we only want to buy strong trends. Now, momentum is a potentially leading indicator. And again, momentum by definition is leading. It's like a locomotive going down the track. You can put the brakes on that locomotive at point A, but it's not going to stop at point A because it has so much momentum behind it, it's going to continue moving forward for a little while. And therefore, you can say, at the point I put on the brake, the train is still going to keep going east, for example. And so same in the market. When you look at this and your instrument that measures momentum says, yes, this trend has momentum behind it, it's very likely that you will put in another higher high after you get in. And that's all you need to at least make sure you don't get a losing trade, at least get a scratch trade, or at least a small winner. So that's hugely valuable. Really important to trade trends with momentum. Okay, number 3 is then cycles. This is the third thing we look at. And cycles is about timing. So here's where my mentor in Chicago, he was talking about people can generally be right, but at the wrong time. So if we've got a strong uptrend, we've got the trend is up, it's strong up, then the question is, okay, when to enter that trade so we don't get stopped out, so that we don't buy, then it gets stopped out, and then it goes back up again. Okay. And we address that. We've got a cycle indicator to help us with that. That's super, super high probability. The fourth energy then is support resistance. And that's used for 2 things. Number 1 for entries and number 2 for exits. So because I'm buying on retraces, I want to make sure, see, the major energy in a trend is the impulse in the direction of the trend. Then we want the retrace to be a weak energy coming down. And we want a support level, therefore, to bounce off of and bounce back in the direction of the trend. And then, since we're using long examples here, resistance levels would then be used for profit targets. And then finally, the 5th energy, but not by any means the least important, in fact, it's really the most important of the 5, is the fractal energy. And that's just a fancy term for using multiple time frames, which obviously that's a very common practice to use multiple time frames. And I do it. I find it extremely important. I will not trade without it. I use it as a filter to keep me out of bad trades and a confirmation to get me into good trades. So I always have to have that in order to take a trade. So basically it just means using different scales. If I'm trading a setup on a daily chart, my weekly chart of that same market would be my fractal energy. If I'm trading, say, a 5-minute chart, then a 15-minute chart would be my fractal energy. If I'm using a 1,000-tick chart, then a 3,000-tick chart would be my fractal energy. Now, the traditional way to do that is to say only trade in the direction of the trend of the longer time frame. And I don't do that. I have a different approach, and I'll show you that in a minute, and I'll show you why. But the whole purpose of this 5-energy methodology, and really of all trading, is to determine a probability scenario that favors you. So how do we do that? Well, we do that very simply. At each potential entry point, when we're considering getting in, before we actually take the trade, I ask myself one simple question. How many of those 5 energies are aligned, all saying buy or all saying sell? Based on that, I give each setup a score of 1 to 5. The higher the score, of course, the higher I consider the probability of success. And I liken this to taking each trade to court. I need 5 independent witnesses to establish a preponderance of the evidence. Now, the operative word there is independent. And let me explain why. If I were to take a chart and put, say, 5 trend indicators on there, for example. And all of them said, yeah, the market's bullish, the trend is up. That would not mean much, because even though I was using 5 trend indicators, you know, they're really not that reliable. I don't trust them at all, in fact. Now I use them, but I don't trust them. Why? Okay, I'll explain that in just a minute. Right now, let's just pique your curiosity with that one. But those 5 indicators, the thing is, even though they're different indicators, they're all measuring the same energy, which is direction or trend. So they're redundant. They're not independent at all. So with these 5 energies that I just shared with you, each one is uncorrelated and unrelated to the other 4. So just as a quick example, let's say that price trend is up. And when price trend is up, sometimes we'll see that momentum is also moving up. In that case, we would say they're correlated, they're aligned, both are bullish, we have a strong trend, great. Sometimes price trend is moving up and you look at your momentum indicator and it is flatlining at the 0 line, just going not up or down. In that case, those energies are not correlated and you do not have a strong trend. Other times, price trend will be moving up and momentum will actually be going down, be moving in exactly the opposite direction. You might say, well, how could price be moving up and momentum actually be going south? It's not only possible, I see it all the time. And that's because those 2 energies are uncorrelated to each other. And again, that's just a quick example, but that's true of each one of these energies is uncorrelated to the other 4. And that's exactly what makes it significant when all 5 energies align saying buy, or all 5 energies align saying short. That's what gives you the probability scenario. So going back to what I said before, not trusting any of these indicators, I don't trust any one of them. I mean, after all, they're not called money makers, they're called indicators, and that's because they don't even tell you, they just indicate. So the one thing they do tell you, actually, if you really want to get literal about it, is they're mathematical formulas. And so some people say indicators don't work. Well, they do work in the sense of you put numbers in one end and they'll give you a value on the other end, and that value is always accurate, and therefore it works in giving you an accurate value of what it's measuring, the energy it's measuring. But that's a long leap from that to actually making a profit. So the profitability part of it comes with then saying, I don't trust any one of these to tell me what the market's going to be doing in the future. But when all 5 of them align and they're all measuring different things, okay, that puts the odds on my side. Now I'm not gambling anymore, because now over a large sample of data, the odds are on my side and I come out ahead. And that's exactly what we're doing, and that's how we do it. So let's look at a few charts here just to give you a little visual, since we're talking about charts, and charts are visual. So the 50 simple moving average, that's the SMA, simple moving average, is the intermediate trend indicator. It gives the overall direction of the market. That's the black line on the chart there. So here the 50 MA is moving down, and we would say, therefore, that the indication is that momentum that trend direction is down. We'll be looking to short during this time. Now, the classic definition of trend is higher highs and higher lows. That would be an uptrend. But as I've already shared, the dictionary definition of trend is to extend in a general direction. So here you see we have a higher low and a higher high, which is often used in technical analysis as defining trend. I disagree with that definition of trend because it doesn't align with the dictionary definition of trend. Here with this higher low and higher high, that is not the extended general direction of the euro here. So therefore, no, I don't use that definition when trading. The 50-period simple moving average, it is a lagging indicator, but it does measure the extended general direction. And this is why you can't use short-term moving averages to measure a trend, like a 9-period SMA or EMA. Some people use EMAs. Well, again, that shortens it up. We don't want it short. We want it long, so it actually measures trend. Downside, does it lag? Absolutely. Absolutely. So we make up for that in other ways, though. So we go to momentum number 2. That's energy number 2. Now, as you can see here, in fact, I'm going to bring my little laser pointer over here because GoToWebinar has this cool laser pointer technology. Okay, so we get high, low. All right, question. How would you know to buy this higher low? That's definitely a higher low. And then it makes a higher high. So that'd be a good higher low to buy. What about this higher low? Is that one a good one to buy? Well, the problem is it does not make a higher high after that, does it? So just looking, here's your 50 MA as the red line in this case. The black line is your 15 EMA. How would you know this one would make a higher high, that this one would not make a higher high after it? Well, the 50 MA or any trend indicator will not tell you that. The problem is you're blind to momentum. So here's my momentum indicator here, but I've got a black curtain over it. Blind to momentum. This is how most people trade. Either that or they might have a momentum indicator, but they don't know how to read it accurately. So let me activate that screen again. There we go. So let's take the black curtain off. And here's our momentum indicator. It's the red line. Okay, and the black line is just a moving average of it. But the red lines are actual momentum indicators. So, and here's your 0 line, which means no momentum. So now we've got a whole new thing we can see. And you can see what? Well, here's our higher low, our first higher low, and momentum also making a higher low. Great. Price makes a higher high, momentum makes a higher high. Now, if this higher low on price, momentum, it's making a lower low than the previous place on momentum. You see that? This spot on momentum is lower than that spot on momentum. See how they don't move together? See how I said they're not correlated? And momentum's a leading indicator. It's making a lower low before price makes a lower low. And that's pretty much the definition of a leading indicator. So therefore, that is what would tell us don't buy this low. Okay, and then again, you see here we've got equal highs, but this high on momentum is lower than that high on momentum. Okay, energy number 3, cycles. Charts have only 2 dimensions, right? We've got time down here, and then this axis, of course, is price. So it's a 2-dimensional object. Now, so many traders, when they brought their laptops over to me who I was mentoring, and I look at, they had all that stuff on their charts I told you about, cluttered and too busy. What was amazing about that was very few of them had any type of timing tool on their charts. Even with all that stuff, they still didn't have a good timing tool. And if you don't have a good timing tool, you're leaving out 50% of the information on your 2-dimensional chart. Well, since trading is all about establishing a probability scenario that favors you, how can you possibly create a probability scenario if you're eliminating 50% of the information on your chart? You can't. So it's just, I don't even know how people could make money without it. Cycles are the rhythm of the market, the timing of when to buy, when to sell. Market, this is a downtrend, but markets don't go straight down, they kind of wiggle down. It's almost like, I call it the respiration of the market. Inhale, the exhale. They wiggle. Cycles, again, are great, but no one indication, no one energy will make you money. So cycles help you time the market, but they don't give you direction, which is trend. They don't give you range, in other words, how far the market will move, how strong the market is, which is momentum. And therefore, they, just like any of these energies, none of them can be traded by themselves. So you wouldn't want to short this cycle high, for example, right? The 50 MA is down, so we're in a downtrend. We've got a cycle high here, but if we short that, we actually put in a cycle low. there's your cycle high, there's your cycle low, but the market doesn't go anywhere. But for timing purposes, yep, that's a low, that's a high, that's a low, that's a high. But you certainly don't want to short that because there's no momentum. That's what we don't have on this chart is momentum. So you don't have the indicator of strength to know whether that's something you actually want to short or not. All right, number 4, support resistance. So we expect this resistance to hold at this cycle high. Why? Okay, this is the blue line here is a resistance level. Because momentum is down. Now, I've seen people who have all kinds of support resistance lines, so many lines that the market can't even move without them hitting a support or resistance line. Okay, that gets crazy. But it actually leads to a good point as to which support resistance lines will the market bounce off of and which will it just slice right through. And the answer to that is, again, just by putting support resistance lines, I don't care if they're Fibonacci ratios, floor trader pivots, whatever, you don't know if the market will respect them or not. You need to use them with the other energy. So in this case, we would say, okay, we're at a cycle high, we're at resistance, and momentum has made a lower high, meaning there's no strength to push this market through that resistance level. It takes strength to push price through support resistance levels. So when markets come into a resistance level like this, if we expect it to hold, we want momentum to be weak moving up into it, and it is weak. Okay? And so, again, same thing up here. Momentum continues down, and so we consider, or we look at those resistance levels holding. I like to use, I got the black line is the 15 EMA on here too, and I use that as what I call dynamic support resistance because the value continues to change since it moves at angles. But I'll use that as resistance. So we get a cycle high at that resistance, and again, momentum is still moving down. And then finally, the 5th energy is what I call the fractal energy. Again, just a fancy name for the next higher time frame. So here we have a 5-minute chart on the left, and we're looking for a setup here. And then we have a 15-minute chart, and we're just looking for confirmation over here. Now, let's look at this. So the red line is the 50-period simple moving average, by the way, just for those of you who are asking. Black line again is 15 exponential moving average. This gold line is the 100 simple, and the magenta line is the 200 simple moving averages. I use them just purely for support resistance. But the 50 I use for support resistance, and I use it for trend direction. Now, what do we have here? Okay, we've got a early retrace in the trend. Okay, first retrace in the trend, cycle high. Now, look at this, momentum, there's your zero line. If the market's going down in a downtrend, all we need to make sure of, there's more to it when we get to a little more advanced stuff, but we want to make sure momentum is below the zero line if we're going short, and it still is here, so that's good. That still means momentum is down. We've just got a little complex pattern here. It's actually a triangle, and on triangles, momentum comes out of the market a bit, but we want it to still be below zero for a short. Then what we do is we look over here. And the energy of fractals reveals the energy on a chart of a different scale, in this case a 15-minute chart, to make sure we are not fighting a greater energy. So the bottom line is this. I won't take a trade unless the energy of momentum on the longer time frame is angling in the direction of my trade. In this case, I'm looking to go short, so I go down here to my momentum indicator, and it must be angling down at the time I take the trade, as I'm entering. And you can also look at your cycle indicator. If that's going down, then that's great too. Momentum is the main thing, though. So if we put it all together now, we've looked at each of the 5 energies in isolation. Now let's look at them all together. So, pretty interesting here on this one. I brought up a little bit of a new example here to show you how we can do some variations on this. So we actually, on the Top Dog Trading plugin for Metastock, we actually have wave counting. And the wave counting is done automatically for you. Now, this is not Elliott Wave, Top Dog Trading, my methodology. I have a unique way that I have created for counting waves. And the reason I don't use Elliott Waves, and I used to do Elliott Waves, and I got a friend who still does Elliott Wave trading, and he does good. You know, he makes money. I don't disparage anyone else because I found there's many, many ways of making money in the markets. But for me personally, I moved away from Elliott Wave trading specifically because it's too subjective, the wave counts. In fact, I was working with a kind of a teacher on that, a mentor, if you will. And every time I would not make money, he would always say, oh, you counted the waves wrong. And even himself, he would send out newsletters, and then the next week he'd do a different recount of his own wave counts. And I'm like, you know, that's just not working for me. I don't like that. I want everything to be very objective, rule-based, black and white. That's how I am. So I have my own way of counting waves that everybody gets the exact same wave count. In fact, it's automated in the software. That's how rule-based it is. So, but I like the concept of Elliott Waves. I think the philosophy behind it, the concept is right on. So if you ever read the market logic of Elliott Wave, there's a lot of wisdom there, and I believe in that. So I've got my own way of doing it. You know, just to simplify it, we're basically looking for higher highs for wave 1, 3, and 5, and we consider an average trend to be 5. Now, my problem with Elliott Wave is they try to fit every trend into 5-wave count, and that's why they have to often go back and recount. So I don't set any limitation on the number of waves a market can have. I've seen markets go up 7 waves, 9 waves, and even more. But around wave 7 and 9, I start looking for reversals because I consider that an extended trend. Anyway, let's just keep it simple here. We've got a nice little trend trade here, so that's wave 1, 2. Now, this is interesting because notice that 2 goes way down, even below the 50 MA, but the 50 MA is still angling up. Therefore, we are still in an uptrend. And what do we got? We've got a gap here. We've got a gap. So the market gaps down, and then it fills the gap. So that's one thing. This little pattern down here, this is what I call a second chance pattern. And this is where we find our very high probability cycle highs and lows. And I don't have a lot of time to go into it today, but that's basically a momentum shift is what's happening there. This is a modified stochastic indicator. That's my cycle indicator. And stochastics I use for cycles, but again, it's modified. It's not the traditional one. And we modified it to turn it into a cycle indicator, but it maintains the momentum formula originally in the stochastic formula. And the momentum, remember, is a leading indicator. So when we see a pattern like this, I've got a catalog of 6 of them actually, that shows that you got a very high probability cycle low. Now, here's a situation where we actually get momentum below 0. Okay, that's not ideal normally, but what we do have is the gap fill, and momentum is angling up when we take the trade. It is angling back up. Okay, then we go to, let's see, oh, we've got support of the 50 MA, so we've got new trend 1, momentum angling up 2, cycle low with mini divergence 3, support at the 50 MA 4, and then energy number 5. We look over the next higher time frame, and sure enough, momentum is angling up, and we've also got a cycle low across of K and D there going up, and so we've got confirmation on the longer term chart. And that's it. So this method is about counting to 5. Okay, and this is high probability trading. All we're doing is we're waiting for the alignment of the 5 energies to put the odds on your side. And I went to I was invited to one of the largest trading clubs in America, and I went there and I spoke, and it was great, nice people, lovely people actually, and huge turnout. Very impressive organization. They do a great job. A few of the people invited me to dinner one night, and so I went, and very lovely time. They had been working on a trading system of their own as a group, not the whole club, but just this group of people within the club. And they pulled it out and they said, we're not done yet, but here's what we've got so far. And they were up to about 220 pages in this trading plan. And of course I was polite and said, wow, that's really a lot of work. Of course I couldn't read it all in that amount of time, but I kind of breezed through it a little bit. Okay, here's my trading method. It takes one sentence. We're looking for a trend. We always do it in this order, remember, to keep our mind orderly. Look for a trend, looking to go long or short. Is it strong? Is there momentum behind it? By the way, if there is not momentum behind it, doesn't mean I can't take a trade. I might actually fade the trend, go the other way. Then at the right time, I wait for my cycle indicator to tell me it's time to enter. I want to be buying off support or shorting off resistance, and then confirm it all by the larger scale, meaning going to the longer time frame and trading only if the momentum indicator is angling in the direction of my trade. If it isn't, then I will pass on the trade. It's very robust. It's very adaptable. I use the same 5 energy method whether I'm trading stocks, commodities, options, currencies, or futures. And I use the same 5 energy method whether I'm investing, swing trading, or day trading. And by the way, I'm a very flexible trader, so I trade all these markets and I trade all these time frames. But I use the same 5 energy method for all of them because if you think of it this way, all we're doing, these indicators as they're called, I actually prefer to call them instruments. I picture them to be like instruments on the dashboard of an airplane. And those instruments will tell you the altitude, how high you are, you know, the tilt of the plane from left to right, from the nose to the tail. And they each do that. They each tell you one thing about the plane, the condition of the plane. So that's how I view indicators. And then when you look at all of them together, you get the whole picture. Well, I'm taking these instruments like a dashboard and I'm just putting them on a chart. Then I put whatever market I want to trade on that chart and whatever time interval I want on the chart. And those instruments will just give me the energy of that market and of that time frame. So they completely adapt to whatever market and time frame I then add to that chart. So it's very simple. It's very objective. We're just counting to 5. And that's it for me. So I'm going to turn it over to Jeff at this point, and he's going to tell you more about the Metastock plugin and the special features that it has to implement and help you use the Top Dog 5 Energy methodology.
All right, you guys should be able to hear me. If you could just let me know real quick in the chat that I'm coming through. Barry, thank you very much. I appreciate your time. I know you're a busy guy. I appreciate your coming in here, and I appreciate all the work you put into this. Thanks, Mike, Eugene, Robert. Okay, great. So I do want to talk to you a little bit. I know when we initially polled the audience, I asked how many people are using Metastock now, and about 72% of you aren't. So for those of you that aren't familiar with Metastock, I'm going to let you try this product really on a money-back guarantee, meaning you won't really risk anything. And I'm also going to allow you to get a free trial of Metastock. I want to talk for just, I jotted down a few things about Barry was talking about what, let's say a nutshell presentation about what Metastock is. Metastock's a company that's based out of Salt Lake City, Utah. We've been in the business since the 1980s, if you can believe that. A couple of things that we're kind of really proud of is our software has been rated #1 in its price category for 24 years in a row, which is pretty incredible. 24 years. We get a lot of people, if you're interested in news in the marketplace, we get all of our data and all of our information with news. Our real-time application actually comes bundled with a product that is available only to Thomson Reuters institutional clients, and you get it as part of the product. But it probably has what is arguably the best news on earth. I've certainly had a lot of people that have come to us over the years that we've been marketing this product called Metastock Zenith just to get news. One of the things that we're most proud of about Metastock, and then we're going to get into kind of how the add-on works and how you can use it. But one of the things that we're most proud of is every year we ask our traders how they're doing, and every year the vast majority of our traders are say that they're successful trading. And we say that that's because they use our software. The things that Metastock can do, a couple of them I'm really going to show to you today, but it allows you to scan the whole market. So I'm going to show you how to run top dog scans in the product. It can help you test trading ideas to see what's profitable and what works on what securities, and has probably one of the best system tests in the marketplace. Has a really good charting engine, of course. We do have some patent pending tools that I'm using more and more as I learn about them, and that are new, that are around forecasting market likelihood of behavior, and we call it the forecaster. There's plenty of YouTubes. I'm not going to show that today, but it's a really, really cool tool. I use it to confirm my trades, or as an additional confirmation that that things are going on. So that's just Metastock in a nutshell. The Barry Burns Top Dog Trading Toolkit is something that I'm extremely proud of. We spend a lot of time working on these products, and we release them when they're ready, and I'm really, really happy with this one. Barry was very, very helpful, very, very specific, and really great to work with as well. But it was a group effort. We really pushed the envelope with what we were doing. So I've never made a product like this before. As I get into this, we're going to really kind of talk quite a bit more about kind of like how this works. But really what we did is, according to the wave counts that Barry defined for us, we generally found patterns for trading. And I just put them up on a slideshow. I'm not going to read them all off to you, but obviously if a trend's new, it's going to have better opportunities for that trend. And as a trend gets older and into the older wave counts, that trend has a more likelihood of coming in here. So what we have is patterns for trading that we've kind of designed to based on where you're at in the market, help you figure out what you should be doing, or whether it's a better idea to go long or to go short. And all of this uses the 5 energies and makes it fairly automatic for you. And we're just going to spend a couple minutes today, but my goal is to kind of show you how it works, how it's kind of a little bit different, and how to use it to find those opportunities. Obviously, like one of the big things about Metastock is it has the ability to look through and tell you, okay, these are the stocks that have the patterns that you're interested in. What should I be doing with those? So a lot of what I'm going to be talking about is going to be scanning. And here's just kind of some more PowerPoints on the patterns. There's quite a few patterns that we developed, triangles here. Let's go ahead and pull Metastock over onto this screen. And let me show you kind of how you're going to use this while you're going through it on the money back guarantee. So let's go ahead and pull this over here. This is a stock. I'm going to show you exactly how I found this stock. It's TFI. While Barry was speaking, I said, oh, let's pull a current example. Let's find something that can be beneficial for people. And this is one of the ones that have come up on the scan that I ran, which I'll show you in a little bit. You'll notice what we're doing is we're counting the waves according to the methodology. You have a bit of a trend ribbon at the bottom, and this tells you really kind of the angle of your 50-day moving average. So if it's angled up, then you're going to be in an uptrend, and it'll actually kind of state that on the chart. Right now you're in an uptrend because your 50-day moving average is angled up. If it's in a downtrend, or if that angle's down, then it's going to actually stay down. So looking at this just kind of real briefly, I can see that for the last, for all of the visible data on this chart, we've been in an uptrend. Okay, so in addition to that, some of the things that we look for also as part of what we're doing is we're looking between divergence between momentum and price. You'll see right here where this red line is. Price is going down while momentum's actually going up, and that's one of the strategies that Barry uses. So we actually plot that on the chart for you. We also have the ability to go in and automatically, if I applied this template, and let me show you how to do that. If you're looking at a chart and you want to look at all of the indicators all at once, right now I'm looking at a daily chart. What I can do to kind of look at all of the indicators that are applicable to the daily chart is I'll right-click on that chart. I'm going to come to this Apply Template option right here. And all of the templates that we've got are named TDT Daily Chart, TDT Intraday, and TDT Weekly. So depending on what you're looking at, it's going to depend on the actual chart that you open up. I'm going to go ahead and apply that. And you'll notice that in addition to kind of drawing that, we're going to draw the important Fibonacci levels, all of the important trend levels. This trend line, actually this is just showing you, I believe, where the Fibonacci's are coming in. And of course you're going to have the momentum. Now I found this because I was scanning for a long opportunity today. The scan that I ran, and I'll show you how I ran the scan as well, was actually looking out of all of the optionable stocks to tell me which ones had a rubber band trade long. Okay, so this is one of the ones that came up. I looked at maybe like 4 or 5. There's maybe 12 that came up. I'll show you the report in a second here. But and then when we get a setup like this, it's going to draw it on the chart, and we have a commentary window. If you don't know how to open this up in Metastock, just click on View and click on the Expert Commentary window. Now when you initially do that, I like to dock it off to the side. When you initially do it, it's going to kind of be floating for you. But you can drag it to any side of the screen and it'll dock itself over there for you. So what we're saying here with this rubber band trade setup is that our entry should be, we should look to enter this particular stock when it goes to $23.92. And we should place our initial stop at $23.90. It also tells us where our target should be, the first cycle high, the second cycle high, or a trailing stop of your choice. So we tell you exactly where to get in, where to place your stop initially, and what you should look for. Now, a lot of you are very familiar with Barry and have been using his products for a while, but some of you are not going to be familiar with Barry at all and are going to want to be able to understand a little bit more what comes in with the rubber band trade. And for that, I'd recommend you go through like our full video demo and review the manual. But one of the other resources that we've got here is it says, for full analysis of this signal, please click the link below. And when I do that, that's going to open up an internet browser. I'm just dragging it on the screen, and we're going to give you a bunch of additional information about that setup and how to increase the probability of success, and some additional commentary that wouldn't fit that we wanted to put in here for you. So what I like about Metastock is when we start to talk about techniques and methodologies, we can show you that there's a rubber band trade on the thing. In fact, we can find it for you. And while you have that rubber band trade, we can tell you exactly what is generating that signal. And I think that's very, very powerful for traders, especially when you're learning about a methodology. I'm sure a lot of you will get it, and you'll read the manual, and you know what a rubber band trade is. But as soon as we kind of fire off that signal, you can come in here and kind of refresh your memory about exactly what this is looking at and how you should trade it. Let me close this down. I promised to show you how to run a scan. I know scanning is quite a new concept for everybody, and certainly one of the things that's really nice about Metastock is, okay, I want to find a trade for today. This is how I found this rubber band trade. So how does that really work in Metastock? And what I'm going to do is I'm going to click on these pair of binoculars right here. So I'll just go ahead and click on that. And if I come down to the top dog in your exploration list, you'll notice that we have quite a few scans that are already kind of pre-configured and built for you. And what you can do here is what I did while Barry was talking. It took about 4 minutes. I went ahead and said, okay, let's go ahead and select the top dog rubber band trades. I selected next. And then I selected the universe of optionable stocks. Go ahead and go through everything that's optionable. I like to trade options. Also with options, you usually get some stocks that are kind of a little bit more, well, you're not going to make the market on them if you buy them. They're a little bit more liquid, and not all the time. I got a story about that, but it's for another time. But I like to look at optionable stocks when I trade because I like to have options on them. So in this particular case, I did the optionable stocks. You can run this literally I don't care where you're at. If you're in Australia, you could run it against Australian stocks with Metastock. If you're in India, we have a lot of customers in India. If you're in India, you can run it against your Indian stocks. Whatever markets that you're interested in, Reuters actually covers 181 exchanges. So whatever markets you're interested in, you're going to be able to scan them for opportunities. So what I'm going to do here is I just select the scan that I want to run. In this case, it's optionable stocks. I'll go ahead and click on Next. And then for the wave counts, I like to get about 4 years of data in there. There's not any hard and set rules. That's what you're supposed to use. I just know with 4 years you're going to have a lot of data, so you're going to be able to kind of have maybe a more accurate wave count. You could, so I like to load in about 1,000 records, which is about 4 years on a daily increment. I did scan daily. Oh no, I'm going to get the hiccups right now. Hold on 1 second. I do have okay, hopefully those went away. I do have a couple questions coming in. I will answer those, Angela and David, as soon as I kind of get through this. If you have Metastock Pro, you can actually scan on intraday, so you could do like a 30-minute or a hourly chart. Again, it took me about 5 or 6 minutes, I would say, while Barry was talking to run this scan on a daily basis. So that's how long it's going to take you to kind of do it on a shorter time frame as well. Let me go ahead and click on daily here. I'm not going to run it. Again, it took around 6 minutes. What I'm going to do is I'm going to go back, and instead of actually running the report, I'll just show you, or instead of actually running the scan, I'll just show you the report or what came back after that 6-minute scan of all of the optionable stocks. So all of the scans are going to look very, very similar. So right here, I've got all of the instruments that have a rubber band trade. That's the scan that I ran, or a rubber band opportunity. I can scan this. So you'll notice we have a column that says long and a column that says short. So if I actually click on this, when it has a 1 in this, that just means it currently has an opportunity for Sportsmanwear, Spider, Parrish, Epic Systems, DXN. And so I can actually, if I want to, I can kind of open them directly from here, which is what I was doing. I can also save this as a list of scans that I can then arrow through as I'm going through in Metastock. To save it as a list, just hit Save as a List right here. I'm going to go ahead and create a new list for it. I'll call it BB Top Dog Rubber Bands. And I usually add a date, so I can delete it after a couple days. After I'm done with the list, I'll go ahead and create this. Takes a second, and then I click OK. All those stocks, long and short, would then be added to a watch list. But that's how you would run a scan. This, one thing that you should be aware of is when I run this rubber band trades, you remember one of the confirmation was to check it against the weekly as well. In this particular case, when you run the rubber band trade setup, it's not going to actually look at the weekly charts, but I can actually even just open up the chart and then check the weekly and make sure that there's a confirmation there. Or the other thing that I could do in this particular case, if I want to come in here to the scanner again, I can come to the weekly confirmation. I could go ahead and click on Next, and I'll just take this rubber band trades right here, click on Next, and then just run this as a scan, and then that would weed out all the ones that didn't have that weekly confirmation. Obviously, I want to set it to weekly when I do that, because I'm going to do the higher time frame. I could start that exploration. In this particular case, it's going to go through the 67 scans that actually had a long or a short, and tell me if any of them are also confirmed weekly. And in this particular case, quite a few of them were, so now I just have to look at those. So whatever you prefer. Sometimes I like to look at the charts. If there's about 67 of them, I'll probably run the scan again and then kind of narrow it down a little bit more so I can just have the ones that are confirmed in the direction that I want to go. Let me go ahead and close this down, and let's answer a couple of questions. Francisco says, or Robert says, does this run on Metastock 11? Robert, actually, it was designed in 13. We've taken available some of the enhancements we've done to the actual scanning engine. And since it was designed in 13, it's not backwards compatible. But that being said, an upgrade from 11 to 13 isn't very much. So maybe you should take a look at 13. And I think if you do, you'll love the new features. Some of the things that they've been working on since we bought ourselves back from Thomson Reuters last year are just cutting edge. It's really nice to see the guys back at work and really kind of pushing the envelope again. Francisco says, are you going to show the toolkit live in the market? I am. This is actually a live market. We don't have it live trading. Obviously the trading day is closed, but this is how it would look on your screen, and this is how you would use it. If you have additional things you'd like me to show you, we can stick around and I can show them to you. I do have a flight I have to catch. I'm going to the Vegas Traders Expo tonight, which is always a lot of fun. I'm looking forward to it. If you're going to be in the at the expo by any chance, stop by and say hi. Angela says, is Metastock designed for Macintosh? No, it isn't. But we do have a lot of customers that use Macs, and they do it very, very successfully as long as they have the new Intel chipsets that Apple's using, and use it. Boot Camp, I believe, is the product that you'd want to use with that, with Windows XP or some version of Windows. So it runs in Windows. I've seen it runs actually really well on a Mac that has Windows installed. Thanks for that question. David asks, okay. Bob says, can I use the scanner for intraday trading? You can. Now, the only thing that you want to be aware of is we can come in here and we can say, okay, well, I am looking at the market today, and let's go ahead and look to see if there's any rubber band trades today. I'll go ahead and click on Next right here. And you go to the list that you want to scan against. So I can come to this U.S. optionable stocks. I can click on Next, and then instead of scanning the weekly, I could go down and scan like a 5 or a 30-minute or an hourly chart. The one thing that you want to be aware of is this took about 6 minutes for me to run on the real-time data with Icon. So it's going to take it's not going to be an instant gratification thing. You'll have to run. You get a report and a list of the stocks that currently have that trade set up, and you can look at them from there. So yes, you can. Obviously, if you do some pre-filters for your list, like you just want to maybe look at the Dow 30, that'll be really fast. If you want to look at the S&P 500, that'll be reasonably fast too. It was about 6 minutes on my internet connection for 4,241 stocks. So if you can minimize that number of stocks, it's going to be something that's going to work a little bit better for intraday trading. Thanks for the question. Okay. Robert has a question that I think I want to talk to him about. Very interesting question. Robert, we have Australian data. I just got back from the Sydney trade show. The last one they're going to do, it seems like they canceled the trade show, but it's always a good trade show for us to go to. We would talk to people about how much they're paying for data down in Australia. Generally, we can provide you an hourly update for about half the cost of what you're probably paying. And the Australian data, we're starting to make some inroads into that Australian data set, and people really, really like it. We just added a whole bunch more lists for Australia. We're committed to providing data for Australia, so I would recommend you take a look at it. Okay, option data included. If you have Metastock Pro, you'll get option data as part of it. Yes, and then even end of day, you can go and see what the options are trading at. A question from Dennis. Savina says, can I use Metastock with multiple monitors? Yes, you can. I have 2 running right now. The setup that's showing right now on the Expert Advisor, this one right here, the last one, is a rubber band trade long. So right here, it's the one that I did the scan for, but if you open up your commentary, it's going to tell you exactly what setup is showing, rubber band trade long. It'll give you your entry and your initial stop for it. Okay? If you trade futures and you just want to look at futures, we have futures data. We get all of our data for, Bob, to answer your question about trading futures, we get all of our futures data directly from Thomson Reuters. So, and we cover all of the major ones. So if you just trade futures and you want to, you could even run a scan against the currency pairs if you wanted to. If I come back to my list, I've got, I might have taken it off of my list. I did. In your list, you will have futures. You can have the ability. I do a lot of option trades, and I don't have futures loaded in this list. By default, you'll have all the futures, and you can run scannings against futures. It works with futures as well as it does with stocks. Let's see. A bunch of questions on Forex. Can this be used with Forex? Does Metastock come with Forex and commodities data? Can you run it on the Forex pairs, please? And the answer to all of that is sure. It does work with Forex. I'll run it against the major pairs, all 36 of them. So I'll go ahead and click on Next here. Just going to run this exploration here. So I'll go ahead and click on Next. I'll go ahead and use a daily interval and go ahead and start the scan. It should go through that while we're answering some new questions. So again, that's about how fast it takes to go through the major pairs. We do have a lot of pairs that you won't be interested in. We've made a list of just the ones you'll be interested in. So if you click on reports, nothing came back with a rubber band trade, but it does work. It told us it didn't have. Does Metastock come with Forex and commodities data? Yeah, in fact, if you go with our real-time version, Forex is always real-time, and we get our Forex data from all of the Thomson Reuters banks, and you don't have to pay extra for it. So it's not like, it's getting some broker feed with low latency and kind of sluggishness and stuff like that. It is a professional institutional level data feed. They literally sell our the data feed that we're using with the news that we have for much more than we do. We have a kind of a sweetheart deal with Reuters, and we really love our relationship with Reuters. We really like being our own independent company. We bought ourselves back last year so that we could focus more on development of Metastock instead of development of Icon. But we really do love having all of the exchanges, all of the data, all of the global lists. Robert, to kind of speak to you a little bit again about the Australian data list, we just added a bunch more Australian data lists that are available in 13. So we love our Australian customers. We want to service those just as well as we service all of our customers. So that was something that we just added a bunch more lists to, maybe 3 weeks ago, based on feedback that we had from our Australian dealers. So it's brand new. We just added it. Do you adjust the charts for dividends? We do, as long as it's, so if it's a stock split, we will adjust it because that's obviously a 3-to-1 relationship. Mutual funds are adjusted for dividends as well. Ron asked me if I can show a DAD setup. Sure, okay. How are we doing on time? Let me come back to that, Ron. I do have a little bit of time before I have to head to the airport, but I do know that some people may want to understand exactly what this is doing. So I'm going to stay around and answer a couple more questions. Let me do this real quick first just so that we can kind of get it out there and that kind of stuff. So we talked quite a bit about scanning. We talked about the explorations. We talked about that kind of stuff. This product talked about the probability of success. Here again are the patterns that are included. So I've put it all on one spreadsheet for you, or not spreadsheet, one PowerPoint slide so you can kind of see what is coming hap. The DAD scan, I'm going to run that for you specifically. Here's the indicators that we developed for the add-on. And then there's 3 templates. So depending on if you're looking at daily and want to do daily charts, you'll use one template. If you want to do intraday, you'll use a different template. And then there's a weekly template as well. We normally only charge, I want to say this is a one-time cost because everybody's all, I have to pay for this every month. It's a one-time cost. So it's $499 if you just buy it on our website. But I'm going to give you it for $399 for attending. So, and if you need access, I know there's a lot of questions coming in about Metastock. If you need access to Metastock, I'm going to include with your 30-day trial of this add-on, and it's a money-back guarantee. I'm going to include complimentary access to Metastock or Metastock Pro. And I'd recommend you do Metastock Pro because then that way you can kind of look at all the news. The market, we had our summit in Vegas just a couple weeks ago, and I'm on my way back, but Tom Busby says the market pays attention to news, so you should too. I'd recommend you try Pro just so that you can kind of get a feel for Zenith. It's a product that they spent $1 billion on. Really, really cool product, and something that's available as part of access to Metastock Pro. Metastock, just to kind of give you an idea on pricing, is like $59 per month. So it's super cheap product, especially if it helps you make money. The offer, again, just to kind of summarize it, $399 for coming today. I'm probably going to make that available till Thanksgiving, just so you have till Black Friday, the day after Thanksgiving. And that'll come with complimentary access to either Metastock End of Day or Metastock Pro, depending on what you want to look at. To take advantage of that, just visit our website at metastock.com/topdog-A. We do have guys that are in the office that can answer any questions you have. So if you want to call them, it's 800-882-3040. I don't know, if you happen to be in Australia and you want to ask about the new Australian data lists that are available, obviously that 800 number won't work. But if you go to metastock.com/topdog-A and click on the chat button, you can actually ask, and they can send you the new lists that we added and all that kind of stuff. Again, 30-day money-back guarantee, $400. You should try it. Okay, let's go back to the questions. I'll leave that on the thing for a second here. We have a sales rep in here that's kind of saying our operating standing by. He's on the phone. He's waiting to answer any questions you've got. We do have a couple people that are still in the office, at least 2 or 3. Give them a call. They'll be happy to help you get set up, and they are standing by waiting to have this for you. Robert says, Robert, chat in with us. Ask about the Australian list. We just added a bunch of them based on what people were looking for. Ron asked, can we show you a DAD setup? Let's scan for one. Sure, I can. I don't have a huge amount of time. I definitely have to get to the airport, but let's do a DAD trade. So again, to run this scan in Metastock, all you're going to do is find the scan. What are we looking for? Let's do a DAD trade. Okay, and I actually do have a report, but I didn't run that scan today. So I'm going to run it right now for you. I'm going to go ahead and click on Next. Okay, now instead of, let's actually run it against the major pairs. No, I want to make sure I find something. With 36 pairs, I might not. Let's do the S&P 500. We'll go ahead and click on Next. I'm going to go ahead and start the scan, and we'll see how long in real time it takes to process. So if this is a scan that you're running, and you want to know how fast you're going to get your results back during the day, this is a pretty good benchmark for how long that'll take. Ibrahim says, I miss that. How much is the Metastock Pro for the monthly fee? I would recommend the monthly fee for Metastock Pro and the Metastock data feed is $250, but you can do that for free for 30 days, and if you like it, you can do a one-time purchase of Metastock for like $1,200. That makes it a lot cheaper. So what I probably recommend, again, is give them a call. And they can kind of talk to you about the options for the trial and your options after the trial for the best way to go about getting Metastock. Most people buy it. They don't continue to stay on what we call our lease. The Metastock professional cost is $250 a month. If you buy it, it goes down substantially from there. And let's see if we had a DAD trade. It's done. So we had several long DAD trades in the S&P 500 today. Let's see. Let's look at Morgan Stanley. We'll just open the chart. Okay. This actually gives you a pretty good view of how this will work for you. So this is this came up as a top dog DAD trade. That's a lot of T's and D's right there. I'm going to go ahead, and what I want to do now is apply the template so all of the indicators get there. So I'm just going to apply the template. The template starts with TD, Top Dog Trader, and I'm going to go ahead and open that with the daily chart. When I do that, all of the levels are going to be applied for me. Here's the long setup, and I know it's going to be a long setup. So here we've got our initial entry, 3560. Again, this is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators in the software. This one actually had 2 patterns today. It had a top dog after the first cycle low, and it had a first retrace after the long, and both of them have, actually looks like the same setup, the same rules, so that might be even a better setup for tomorrow because it's having 2 of them. Again, if we want to get further analysis on either one of these patterns, we just double click on it, and that easily you're going to have the additional commentary, and it'll tell you a little bit about the first cycle after the dog turns up and stuff like that. Let me go ahead and click on the next one. I'll show you that one real quick. Again, not easily, because you're learning about these setups. I love Barry's stuff because you're looking at 5 things that are all not the same thing. A lot of people will say, well, I use moving averages and MACDs. Well, it's the same thing. You're just looking at it in a slightly different way. You want to look at things that are different. So that's the thing I love about Barry's stuff is he's looking at 5 non-correlated indicators, and he has a very specific way of looking at it, and everybody can kind of see the same thing. Okay, let me go ahead and close this, see what other questions came in. Satej asked a good question. Thanks for your question, Satej. I'm just going to kind of switch back to my PowerPoint so we can kind of show you the phone numbers again. What is the difference? Let's just minimize this. Where is it? Did I close it? Okay. F5. F5. It's always a way to do something. Oh, jeez. Got a little excited there. What is the difference between Data Link and the Metastock Pro? Data Link will give you, in most markets, an hourly update, and that's all. Metastock Pro is full on real time, so you'll be able to watch it real time. So we used to call it Metastock End of Day, but then we added hourly updates to it. So that's the difference. The other big difference is Metastock Zenith is an incredibly fantastic news product that's included with Metastock Pro. Those are the two differences. What is the phone number? I can call for questions now. You can call for questions now to answer that question. The phone number, if you're in the U.S., is 800-882-3040. I'm not sure of the international phone number, but you can get it onto metastock.com/topdog and chat with a representative live. Mike's question is Metastock 13 and TopDog trading a download or a DVD? It's a download. We're updating Metastock 13 every other month right now. So we just released another fix to it. It's really exciting time to work for Metastock because the development efforts have never been stronger. We're fixing issues. We're doing new technology. We're doing the forecaster. It's awesome. Really, really cool stuff happening. So because we update and we patch and we put out new fixes every other month now, it doesn't make sense to make CDs. We just basically make it as a download. We still have a retail package that you can get shipped to you, but it's only going to have like a getting started manual and a pretty box. So I'd recommend you just do the download. I missed the part on what DAD means. I'm trying to remember offhand what DAD means. It's an acronym, and if Barry is still here, maybe he can answer that one. I don't really remember what the acronym stands for. I cover it in my video that I recorded maybe about 3 weeks ago for the launch of TopDog, and it's slipping my memory right now. Probably the fact that we're getting late in the day and my coffee's wearing off. There you are, Barry.
Jeff, can you hear me?
Yes, I can.
Oh, okay. Dad is, mom is the moving average, or I'm sorry, the momentum, so mom for the first 3 letters of momentum. And then dad is really a moving average of the actual momentum indicator. I just called it DAD it actually refers to the direction of momentum, a smooth direction of momentum. So D kind of stands for direction, and of course mom and dad just go together as familiar terms, obviously, and so they work together. And we do setups where we look at the relationship between those 2 lines. So we have specific setups where we're looking at the mom line, and then other setups where we're looking at the dad line. And again, dad, essentially, just to make it real simple, is a moving average of mom.
I had another question. Thanks, Barry. Appreciate that. We had another question about, I'm in Australia. Can I call the 800 number? You can't. Here's a number you can call, though, if you're out of the country and you want to order right now. It's 1-801. The country code's 1. 801-506-0900. And it does say they're open from 7 a.m. to 5 p.m. Mountain Time. We're still open. We still have people here that are actually just waiting for you to call in so they can answer your questions. So let's see. Let's go through this. Okay, Satish says, I want to look at, can we test, say, the rubber band trades on SPY? You can do that visually. We'll show you where all the systems are and things like that, but there isn't a way to actually system test that particular setup. Thanks for the question, Satej. Okay, I answered every question, I think. One thing I'd like to kind of end with, let's go ahead and switch back to the slides. So I hope you had a chance to write that down, 801-506-0900 if you're in Australia and you want to get this. They can also talk to you about the lists that are available in Australia. Believe me, we're serious about data in Australia. And I sat there for 4 days in Sydney going, okay, what are you paying for data? Okay, well, guess what? We're half the cost. Oh, yeah, we also include hourly updates for that. Oh, yeah, and we also have all this stuff. It was actually a pretty easy conversion because it's a better product than what most people had in Australia. So you should at least give it a try on the trial. You're welcome to do that. You can do that either online or you can call one of our guys. They can help you get it set up. Want to say thanks for coming to the class today. I really appreciate your attendance. Try out the program. You'll like it. I mean, really, I know a lot of people, particularly those of you that are with Barry, may have a different product, and it's a good product, but I would say that the ability to, some of the things that we've been working on just really push the envelope. Personally, I wouldn't trade without Metastock. I do sometimes when I only have my phone and just are placing orders, but I'm always kind of have it up and running, and it's really going to help you with your trading, and you really should give it a shot. Again, it's a money-back guarantee and a totally free trial, so what do you have to lose? Thanks, everybody. If you're coming in Vegas, stop by the booth and see me. I'm going to be talking about Metastock for the next 4 days straight. So I look forward, if you're in Vegas, you're coming to the Traders Expo, come see me. Thanks for coming. I really appreciate your time. I do want to say working with Barry has been a privilege. One of the things I really like about my job is I get to work with people that I respect in the marketplace, and we only really pick the ones that we really like to spend 3 years on a product with. So I think you'll like this. Give it a shot. It's a money-back guarantee. We include a free trial, and you're going to love it. That's it for me. I'll see you at the next webinar, and thanks again.